welcome and congratulations. And you want to learn and you want to know what's up here at Community CPA. And I thumb up for you and welcome you. Let's get that started. Today's topic is about home energy efficiency credit. And a lot of people call it solar credit, however they call it. It is a federal and state incentives for you to spend money on energy efficient lifestyle. Let's put it this way. Every time they talk about tax credit, some of our folks will say that that has nothing to do with me because I don't pay taxes. Well, there are some tax credit has to go to you. If you pay taxes, then you can reduce your payables, right? So you reduce your tax. But there's also tax credit. It's called refundable tax credit. Regardless, you have a tax due or not, you would get it. So there's so many things and knowledges you can pack on to what we talked about and really run your household, run your own book properly, okay? And that's really what we are trying to encourage everybody to do. Real stuff is no responsibilities, okay? And you have to take our knowledge, take what I said with a grain of salt and please take your own responsibilities and don't just rely on knowledges on internet, on webinars, on YouTubes. It is a good resources, but listen it with your own judgment. Okay, now home energy efficiency credit. I want to kind of just give you the big picture, okay? So every time you talk about these kind of efficiency credit, and you may be talking about the federal credit, maybe talking about the state. Every state is different, okay? I have California, Minnesota, Iowa here, so I will talk to you. But there's many other states too, right? So if you live in a different state, make sure you check it out because these kind of programs, once the federal has it, and a lot of time the state will copycat that into their state, they tweet it, they go for the state situation, but the legislature at the state, they are in business with that. They actually will talk about it, making it into law. So every state is a little different and we'll cover that. But for the federal, and there's two types of these credit. One is called non-business energy property credit for improvements. The other one is called residential energy efficiency property credit for install the new, okay? And both of them are non-refundable credit, can be carried forward. What do I mean by saying that? What I mean is, whatever dollar amount you got, it is not an income tax deduction for you. Rather, it is tax reduction for you. But if you don't have any tax liability, in another word, if you don't have tax dues, like you don't owe any taxes on 1040, then your credit will not work, right? Because they're only gonna offset your liability. So what happened in that case, it will get carried forward to wait for next year when you have the tax credit, okay? And the form 5695 is the form that you use. I will go to that form together with you so you know how to fill it out, okay? And for the state, I listed here for you the name. In Iowa, it's called the Solar Energy System Tax Credits. And in Minnesota, it's called the Solar Incentive Program. California, it is State Income Tax Credit for Solar. So those are the names. But generally speaking, each state has their own time to implement that. Now, let's talk about non-business energy property tax. That was the first item. The credit was available for energy efficient home improvement that fell into two categories. So remember here, we're talking about home improvement. This is non-business energy property credit, okay? Number one, building envelope components. So-called envelope component, just like the word suggests, is an outside component. It's like your window, your exterior doors, and your metal roofs, things like that. So building for envelope components. Number two, energy properties that improves the home heating cooling efficiency. So that would be your solar panels. That would be what? Your windmills. I do have a client, and he's exploring to set up windmill, and in his he lives in a farm, so there's plenty of land, so he can set up windmills and to be qualified for these property tax credit. All right, so what about in the past, this non-business energy property was kind of terminated back in 2017, but with the Consolidated Appropriation Act happens this year, and now it put back on the table again, and it is 10% of the cost for the installation, or 500 tax credit. Is no more than 500 tax credits. So 10% means if you spend 50,000, if you spend 50,000, 10% of 50,000, so that would give you 5,000, right? So it's only 1% of the 50,000. So if your not windmill, at home, if your solar panel is say $5,000, $50,000 times 10%, then you got times, actually, if it is 5,000 times 10%, you got 500 tax credit. That's the maximum. So they're giving you. So this is got extended from 2017. Now, if you have done that in the 18, in the 19, in the 2020, and now you have this credit available to you every year. Okay. Now, the other credit we mentioned is residential energy efficiency credit. This one is 26%. So 26% of your cost. So it's a lot bigger. And the solar water heater, thermal heat pumps, small window turbines. This is the one I was talking about on the farmland. And the fuel cell properties, some solar roofing tiles. So they give you some examples on that. For the qualified properties, the installation, this is one thing that I want to really emphasize on that, because the bottom line is you could have the credit. Let's say you're filing 2020 tax return, right? So you're thinking of taking advantage of this credit. Your project has to be done by the end of 2020. So it has to be finished before you can apply. So here is the percentage that cover the percentage of the cost can turn into tax credit. So at the beginning of 2017, December 31st, 2016, before January the 1st, 2020 is 30%. Then from 19 to 23 is 26%, then 22%. So they go down by the layer. They're assuming that you probably okay by now. With so many credits going on, there's a lot of people already did what they need to do. So the credit is going down. The popularity will be coming more, right? People knows to take advantage of that. And then on your solar energy system tax credit for Iowa, and they do have, the first portion we talked about was a federal government, but for every state, remember I told you it's different, but for Iowa, it's actually split by residential or business. And the refund is very different, because for residential, Iowa give up to $5,000 on tax credit and non-refundable again, right? And then, but for business is 20,000, it's 4 times of your residential. So let's say if you are, if your business also does the solar installation, and then that would have a 20,000 upper limit, so you can get tax credit for, but for your personal is 5,000. So Iowa is actually really into the solar energy system tax credit. And Iowa has the best among the three states, California and Minnesota. And you need to go on to iowa.gov dashboard for solar to apply. So this is, we just want to tell you that you need to do that. The deadline is May 1st for installation completed on December 31st. So I guess right now we're already late because we're 30 days late, but you do that before May 3rd for prior year. So that's Iowa. And in so these are documents needed for apply for that. It's really common knowledge. They want you to give them the receipt of the installation and stuff. So it's common sense. And here in Minnesota, it's called the Solar Incentive Programs. And this program got appealed back in 2017. So the you know, they are the payment from, they call that Made in Minnesota. There is a program called Made in Minnesota. The payment from this program is actually are paying for the solar incentive programs. So this solar incentive program was repealed during 2017 legislation, and so there is no new solar program in place right now. So we just want you to know that there was a one, and there's still people are getting paid, but out of a different program. But this particular one are not on the table yet. So on the solar incentive program, and with Minnesota, they have this solar rewards program, provides recipients with 10 years of annual incentive payment based on solar energy system annual production. This is so much more for businesses that had set up these solar power panels that working with a utility company. So I don't think household individuals are actually benefiting from that. Is more of a company that is already working with the energy system. So I'm not familiar with Otter Tail Power, but that looks like it's a kind of mid-America kind of company, offers public owned property solar program. What that just means is that you go in as an investor to invest in their solar production, then you get a return. So I see that quite a lot in Minnesota. There are a group of individuals who get together and are selling those programs. So you invested, then you can deduct your investment right away, and then you also get a return. So sort of like so long ago, if you ever got involved with the oil investment, where you buy like a fractional point of ownership, you pay like $40,000-$50,000, but in the first year you can kind of get all of the payment you put in deducted out of your passive loss, and then save taxes that way, if you recall that. So in Minnesota, there are similar programs like that. I actually don't quite remember the name, but if you are interested, and I literally have someone I can refer you to in Minnesota to understand this program more. It is a tax saving tools for people with tax dues to pay, right? State tax dues. For California state, and there is no state level incentives on efficiency, on solar efficiency. It is more all concentrated with different cities. So cities would, or the counties would have things available to help offset some of the cost when you build the solar panels and setting it up for setting it up for collection of energy, or maybe resell the energy. So all of that is more on the city side. So our last slide here, I want to show you Catherine's email, because I want you to know that you can email her to get to know what our topics are, and also what topics are more interesting to you. Okay, and let me show you now the form I was telling you, because if you apply for those credit, you really need to know which form you're dealing with, right? So now follow me with this one. So I came up to, so this is no secret. This is just a IRS website. I pull it up, okay? So in here, you can see that this form is 5695, residential energy credit. So look at this item 1, qualified solar electronic property cost. Let's pretend that I put in the solar panels at home. Okay, we're gonna do math here. So, and we are going to do 35,500. So that's my cost for that. So when I have the cost, and I will, of course, if I have a heater cost or whatever come up, maybe I will add another $500 for my heater, qualified solar heater property cost. So that gives me to 36,000. So my 36,000 is right here, 36,000, okay, for the year. And I need to use the 26%. Remember in my slide earlier, I'm going to point that out to you. Give me a second. Yeah, right here. So I am going to show you really quickly. Remember that 26% is right here. So the property, it is the property placed in service after December 19 and before January 1st, 2023 is 26%, okay? So this is where that 26% comes in. So I take 36,000 times 26%. So what does that give you? Give you 9,360. So what does this dollar do to me? You know, when I have this one. And let's pretend you are supposedly paying taxes this year. So you have $10,000 tax liability to pay. So now you suddenly remembered, wow, I have solar credit I can take. Let me see. So you calculated 9,360. So if you look at the form underneath here, it says that residential energy, you know, this is a limitation on tax liability because we have 10,000. Remember we said we have 10,000. If we only have 5,000, you're going to be limited to 5,000, right? Because it's non-refundable tax credit. Remember I said that? So right now you have a 9,360 and 10,000 and a minus 9,360. So I need to pay what? So this is my energy, 9,360. Oops. 9,360. And so this is my 10,000 taxes. I want to show you this because this 9,360 comes to where? Comes to your 1040 Schedule 3, right here. Residential energy credit attached 5695. So I'm going to put 9,360 right here. When I put that in there, on my first page of 1040, I didn't really get the 1040. Let's just look at our 1040 form. You see how I just came over here, right? So that is the Schedule 3. And on the Schedule 3, it says that that's a Part 1, number 5, residential energy credit. So that is a non-refundable credit. So come over here on the second page, and this will be a subtractor to your taxes. So you see the tax credit, other tax credit. This is your total tax. Our total tax is 10,000. The form is too small. Let me make it big for you. Okay. So on here, and really you're supposed to just pay 10,000, right? Because that's your taxes. You see, you have your additional child tax credit coming in here, American Opportunity Credit coming in here, recovery rebate credit. That is the, stimulus check. You didn't get it. And this is here. Amount from Schedule 3, line 13 is here. So I'm going to put So my total payment would be that number minus this number. What would that be? 640? So what is my tax payment? My tax payment, the tax due would be 640. My total tax due. Okay, so this is where your 10,000 went down to that, is because we were doing this 56.95. So with that, it's the same thing applies for the state. So you have the federal credit. The state credit is calculated at the state form, just like federal form. And you go in and you subtract your taxes. So I hope that really kind of give you an insight of the solar tax credit. And I wonder, I have any questions from anybody? And so far, I don't see any question. So I think we'll make it short. So I hope that you did receive some useful knowledge for you. And keep in mind, it has to be done. You cannot be saying that, well, I will do it. I made a payment already, but it is not there on my property yet. That's not good enough. So you got it done. And then you apply for that credit. And know that December 31st, and when you finish it before 2023, December 31st, you're still at 26%. After that, they reduce it down to 22%. It was 30% before, okay? So hopefully that gives you some ideas, and make sure if you have any more questions, you have us, and talk to you all again